Hi all, this is Steve Money, the market chartist on behalf of ForexFraud.com, and we're now going to take a look at both the US dollar versus the euro and versus the Japanese yen within the G3 currency space. G3 being euro, dollar and Japanese yen. The dollar continuing to weaken against those G3 currencies, against both the euro and the yen over the last week or so, particularly weakening since the FOMC meeting on Wednesday 16th of March, and that reinforces underlying bearish US dollar sentiment we had anyway versus both the euro and the yen throughout this year so far, and looking for further US dollar weakness within G3 going into late March, going through the Easter break, and then going through into maybe early April into early Q2. So we're going to start off here with euro versus the dollar, and we had this dip and then spike lower previously in mid-March on the 10th. That was during the ECB meeting, then a resilient consolidation, and then through the FOMC meeting, another bullish surge in here last week, up close to this 113.76 peak. Kind of still a broad erratic range environment, but certainly a bull tone, kind of developing here from December last year, but then been erratic in here, very erratic since the middle of Q1. But looking for a more bullish theme, targeting 113.76, 113.95 and 114.95 going into late March in here, and then real potential for a more bullish shift even towards 117.14 as we go through maybe into April. If we zoom across to the US dollar versus the Japanese yen now, the market has been very much defined by an erratic consolidation, but unable to break up through 114.88 throughout March. We've had multiple opportunities in here to pushing through to a 114 handle above 114.00, and then not able to push through 114.88, which would have secured a double bottom from these two lows in here from February. The plunge lower since the FOMC to take out not only range supports but to take out these lows sets up a bigger picture, more bearish threat in here, with this whole intermediate term bearish theme from December last year intact, and particularly from this acceleration lower in early February. All of that leaves risks to lower targets 110.33, 110.00, and potentially much deeper correction risk into April, going through into April this year. This has been Steve May, the market chartist, on behalf of ForexFraud.com, and I wish you a great trading week.